Hey, it's Mark Helfman with another update for subscribers to my newsletter, Crypto is Easy. If you are not subscribed to the newsletter, check the link below, click the link below, pop over to Crypto is Easy, take a look, and if you like what you see, please feel free to subscribe. If you subscribe, you get a lot more detail than I included in this video, as well as airdrops, altcoin recommendations, both of my ebooks, and updates on my plan to dominate the upcoming Bitcoin bull market. Uh, you also feel free to subscribe to this YouTube channel. I don't plan to become a YouTube celebrity, but if you subscribe, you get the videos at the same time everybody else does. You don't have to subscribe to Crypto is Easy, but these videos are just kind of more me putting out my thoughts than delivering the kind of value that you get as a subscriber. So here I am. It's very late. It's very well. It's really early in the morning on April 11th. It's somewhere after midnight where I am, and I was working on my altcoin write up for April, and I've been kind of obsessed with this with all these similarities in the on-chain data and the data science behind what's going on with Bitcoin, how Bitcoins are being moved around the network. And it's the similarities between the later part of 2015, like right when we were setting up for that huge 2-year bull market that took us to $20,000 Bitcoin, and what's going on right now. Yeah, as I've told subscribers, and I put in one of my other videos, it's just crazy the hodl waves, the patterns of movement among different bands of holders, um, the the Pell multiple when we crash through the 200 weekly moving average being exactly the same as it was in 2015. This massive accumulation by the big holders, so these whales, same trajectory, and actually just passed at roughly the same. Well, anyway, it also just passed a point where you have a thousand with a number of wallets that have 1,000 bitcoins in them, along the same trajectory path that we did at the end of 2015, as well as a big drop in the supply adjusted dormancy, which is another way to indicate accumulation by these large holders, these strong hands, these people who they're not selling. This is smart money. These are true believers. They're not selling. And so you have so many signals that sellers have mostly left the market. And it's just eerie coincidences. Now, I am always concerned about bias confirmation, and that I see these coincidences because I'm looking for them. And it is true that there are a lot of things about today that are different than it was towards the end of 2015, including some of the on-chain data that you see that I use Glassnode and other services to get, so these are coincidences. I'm not suggesting that we're about to start this massive bull run, and that's what I'm saying. And I don't want to get into hopium, but there was one thing that struck me, and I want to show you a chart. I'm going to flip over to a chart, but before I do, I just want to remind you, if you're subscribed to Crypto is Easy, we're going to stick to the plan. It doesn't matter what I show you in this video or any other videos I post to YouTube. The plan is the plan, and we're going to stick to it. That is based on data, on science, on 11 years of analysis of Bitcoin and how people use Bitcoin and how people move Bitcoins. You're not going to get that in this YouTube video. Subscribers, you know where you're going to get it, and I'm going to keep you updated whenever there's something important to know about that, either when there's a dip that we're going to buy, or if we're coming to the top of that market cycle, or if we go much lower, and so there are things that we're going to need to know as far as the plan goes. Leave that to me. That's why I call it Crypto is Easy. I'll keep you updated. But I felt compelled to show you this. It's just another coincidence. I wanted to show you in this video. Let me flip over the chart. Now, I am not a trader. And the reason I'm not a trader is because I don't care about these the 10, 15, 20% gains, the 50% gains, the swing trades, things like that. Like, I don't care about this move. I'm looking for this move. I want that move, right? I don't need this move. It doesn't matter. And the plan is all about capturing this big move up that we're going to see. We're going to see it at some point. It may start now, and if it does, even if it doesn't, it's going to start at some point, and we're going to get all of that. And I don't want to mess that up by trading in between. So this is not a trader's plan, but I do like to keep an eye on what's going on in the market, right? What's going on, to get perspective around what's going on in the market. And so that means learning a little bit of technical analysis, nothing too serious. But one of the measures that is really interesting is called the RSI, it's the Relative Strength Index. This is the price of Bitcoin over time. It starts back in about January 2015. It ends around today. This was the 2015 capitulation that I've been talking about. This is really where the bull run started. We dropped way down. We were $200 per Bitcoin, and then we just shot up. So here's a very similar capitulation based on what you see on the on-chain data and the metrics of holder behavior. Really, miner behavior, holder behavior, the things people are doing with Bitcoin. It's so similar. This capitulation is so similar to what's going on with this capitulation. And that's what I'm talking about. But what's really, really fascinating is when you look a little bit deeper and you look at the RSI. So the RSI is basically an indicator that shows it's a mathematical formula that helps express the relative the momentum of a trend. And so as you go up in RSI, that indicates that more people are holding profits. And then as you go down, that means more people are holding losses. And so RSI will always go up and down and up and down. It doesn't really, that's all you can use it for. It's just one technical indicator of strength of a trend. When you get to the top of an uptrend, the RSI tends to get overbought. When you get down at the bottom of a trend, it tends to get oversold. And that's it. It's just an indicator of that. But one of the things that I think is really, really interesting. So if you look at what happened back in 2015, we had this run up, and then we went down into a capitulation, right? That's the 2015 capitulation I was telling you about. And so where we started that run, the RSI was way up here, and then we went way down, right? Very natural, very normal. Now we came back up, and we had this run up before another drop down. And this drop right here, that was the beginning of the true earnest bull market that took us to 20,000 right there. That was a start. So the price never looked back. At that point, the price never went, it still hasn't gone back. And look what happened and the other thing is, that was where we dropped below that 200 weekly moving average. This line is the 200 weekly moving average, just like we did last month. So you see where this ended, and this was the last seller in this capitulation right here. We're way down. Now, when we go back up, we come to that little peak right there, right? And at that peak, we're at about 55, 56, around 56 on the RSI. And then we come back down. And when we finish coming back down, both times we tap down here around the 200, we get a little bit, we get about 220, right? Each time there's about 220. And we tap right around that 39, I guess it's 38, right? 38, about 38. And then we go back up, and we never look back, right? And we go zoom up, right? And we never look back. It's all gravy from there. Now let me show you what's happening right now, today. All right, so here we have, this is our 2020 capitulation, right? And we had the same thing. We had this run up, get to the top of this RSI. We're overbought. Then we come back down to this capitulation, and we're way oversold. When we come up, so we have this top and we come back down, right? That's the capitulation. Now we just came up to here. And where's the RSI? Right at that 56, just like it was in 2015. So now I don't know what's going to happen over the next 2-3 weeks, but if we spend the next 2 weeks coming back down like this, and we're going to hit somewhere around that 200 weekly, maybe even above. So we're going to be somewhere around 5,800, 5,700, 5,900, something like that, maybe in 6,000, something like that. And this RSI drops right here, right up to that 38, like it did in 2015. And then we stop there and we start going back up. And just like in 2015, it's not a big bounce up. It's just, we start going back up. We're kind of struggling. It's kind of sideways. And here, same thing. We're going back up. That will be an exact repeat of the pattern that we saw towards the end of 2015. And if those hodl patterns and all that accumulation, I told you that, the Pell multiple, all those other measures, that data science that I've showed you, if you're subscribed, you know it. And if that all matches, just like it's been doing so far, if that all matches 2015, oh my God, man. Oh my God. Like, it would just be like, I always take it day by day. That's why I have the plan. That's why I follow the plan. But that would be something, right? That'd be something. Because if that happens, and like I said, it's not hopium. I'm not trying to feed you hopium, get you all excited, because who knows? You don't know. We don't know what happens. We could just crash down here. So the plan accounts for that. Or we could also just, we could keep going up. We could go boom and just keep heading up. We don't know. Nobody knows. I'm just saying, if we did this and we came back to here, maybe as low as 5,600, 5,800, 6,000 or something. That RSI hits right here. All that data science, it's all aligned. And when you keep seeing these coincidences, well, there's a certain point where you say, when you have so many coincidences, you can start expecting that the same outcome that you had the first time you had all those coincidences is going to be the same outcome you have this time. But we're not there yet. We're going to have to see how it goes. You have the plan. Stick to the plan. The plan will take care of us. We don't need to worry. We don't need to get ahead of ourselves. We're just going to follow the plan. But this is something that we can watch. And if we do get there, if I can guarantee you, if we get down to back 5,800, or sorry, 58,000, even 6,000, or even 5,600, or whatever, people are going to be like, oh, we're going to 3,000, we're going to 1,000, we're going down. Oh, this is terrible. This is the worst and everything. And we're going to be sitting back and we're not going to be worried. We're going to stick to the plan. And, look, if we keep going back down and we keep going down, then we'll have I know exactly what we're going to do if that happens. And you should too. I mentioned this a few weeks ago. So I know exactly what's going to happen. We don't need to worry about any of that right now. Just wanted to throw this out there for your attention, give you a little bit of perspective, show you some really interesting coincidences. Subscribers, we're going to stick to the plan. If you're not subscribed, click that link to Crypto is Easy, subscribe. It's late, I'm tired, I got to go to bed. I hope you guys appreciated that. Relax and enjoy the ride.